Good afternoon, everyone. Thank you so much for joining us. I'm Patricia McKinney, Director of Small Business and Member Programming here at the Greater Memphis Chamber. And today's webinar is hosted by the Small Business Council. And this council is led by two phenomenal co-chairs. That would be Meredith Hennessy and Larry Robinson. We are really grateful to our Small Business Council programming sponsors that support our efforts. That would be Independent Bank and Wyatt, Tarrant and Combs. So representing Independent Bank is Jeff Kimbrough, and with Wyatt, Tarrant and Combs is Matt Lubazinski. So Jeff, would you give a few words on behalf of Independent Bank as a sponsor?
Hey, thank you, and good afternoon, Patricia, and everyone else that's joining us. Again, my name is Jeff Kimbrough with Independent Bank. We're locally owned here in the Memphis and Shelby County area. So just wanted to take a brief moment to say thank you for joining us. We're very grateful to be partnering with the Small Business Council. And if there's anything that myself or anyone here at the bank can offer to you, your business or your team members, we're more than grateful and more than delighted to be of service to you. You're more than welcome to reach out to us directly or reach out to us through the chamber, and we'll look forward to you enjoying today's Zoom meeting. Thank you.
Hello, everyone. This is Matt Lubazinski from Wyatt, Tarrant & Combs. We, too, are happy to be a sponsor of the Small Business Council. And if you need anything legal, then feel free to give us a call here at Wyatt, Tarrant & Combs, and we look forward to the presentation. Thanks.
Thank you again to our sponsors. The driving force behind the Small Business Council is our think tank, and they help us serve the needs of our small businesses. And because of this group, the overtime changes that were put into motion on July 1st were brought to the forefront to our small business members. And we're so thankful to this group for their diligence to keep our members well informed. I have the pleasure now of introducing our presenter and subject matter expert. He is going to really take a deeper dive into those overtime changes that took effect. Mark Friedman is Vice President of Workforce Policy and at the U.S. Chamber of Commerce. He develops and advocates the Chamber's response to OSHA matters, FLSA issues such as overtime, minimum wage and independent contractors, paid leave issues, and EEOC, and other labor workforce issues. Before joining the Chamber in 2004, Mr. Friedman was the regulatory counsel for the Senate Small Business Committee under the chairmanship of former Senators Kit Bond and Olympia Snowe. He focused on ensuring that agencies' property take into account the impact of their regulations on small businesses. He appears on various media outlets such as Fox News, CNBC, Bloomberg TV, and National Public Radio, in print in the Wall Street Journal, the New York Times, and the Washington Post. In addition, he has testified before Congress on behalf of the U.S. Chamber. I present to you Mr. Mark Friedman. Mr. Friedman, the floor is yours.
Thank you so much, Patricia. Good afternoon, everyone. It's nice to be with you. I apologize in advance. I'm dealing with a little congestion issue, so I may be a little bit stuffy here. Hopefully, you'll all be able to hear me and figure out what I'm saying. Let's get into my slides, and with any luck, we should be able to bring this up without too much trouble. There we go. All right. So, as Patricia mentioned, we have a whole new overtime regulation in front of us. the first increase took effect on July 1st. The next increase, much more significant, will take effect on January 1st, and we'll talk about what those look like as we go through this. All right, so it was published April 23rd, and just to step back so we all understand what overtime means here. Fair Labor Standards Act is the law passed in 1938 that gave us minimum wage and overtime issues. It says that at least on a federal basis, employees have to be paid time and a half for any hours over 40 hours a week. California has a different structure, so we don't talk about them. The question becomes, oops, I'm sorry. There are all these exemptions within the law about people who don't have to be paid overtime. The key ones here for our purposes are what's called the white collar exemptions that cover executive, administrative, and professional positions. And we'll talk about what those titles, what those positions mean. In order to be exempt from being paid overtime, an employee has to meet all three of these characteristics, all three of these requirements. So they have to be paid on a salary basis, meaning that they're paid the same amount regardless of how much work they do. That salary has to be above a specific threshold, and they must satisfy the duties specified for the classification under which they're listed. We're going to get into those questions in more detail as we go through this. There's also this other category called highly compensated employees. It's not used very often. It's sort of a catch-all at the end. Basically, it means that you're being paid more than other people, and you only have to meet one of the duties of these different classifications. And it's a higher salary threshold. It's sort of a last resort concept. So what did this new regulation do? What it did was adjust these salary thresholds. And so some of you may recall back in the day when the Obama administration did this, and they jacked it up, and then that got shut down by the court. And then the Trump administration came along and implemented a new salary threshold, which is the current one right there at $35,568 a year. I'm sorry, that was the previous salary threshold. On July 1st, as you see, it went up. So they increased that from $35,568 to $43,888, almost $44,000 a year. And then on January 1st, this is going to jump again, as you can tell, very significantly, all the way up to $58,000 and some change per year. My crude math suggests that's about a 63% increase from where it was previously at $35,000 a year. So that's a big increase. So again, in order to be exempt, your employees are going to have to be paid a salary. It's going to have to be above these thresholds, and they're going to have to meet the duties test. And then we have this highly compensated employee threshold. Again, that's only for employees that meet one of the criteria, but their salary threshold goes from the current level of, well, I'm sorry, previously 107,000 all the way up to almost 33,000 as of July 1st. And then again on January 1st, it's going to get jacked up again. And then, as if that wasn't disturbing enough, every July 1st, this salary threshold is going to get adjusted by using the current salary data. So as of July 1st, 2027, that's when the next adjustment is going to happen. The result of that is that you're going to get these salary thresholds ratcheting up very quickly. It's not a hard thing to imagine that when you start at $55,656 a year, that this salary threshold is going to get up into the 70s and possibly 80,000s in a few cycles. And that's what you're going to have to be paying people in order to not pay them overtime. So it gets expensive very quickly. Just want to make sure I cover this. So I want to talk a little bit about the duties test. Now, the new regulation did not adjust these duties tests, which is sort of a good thing, but you have to understand what we're talking about in terms of exempting somebody. So if you want to exempt somebody as an executive employee, these are the duties that go with being an executive employee. You're managing, you're basically directing the work of several people. You have to have the authority to hire or fire other employees. And they talk about, and this comes straight out of the Department of Labor's website, so I'm not making this stuff up. Management includes all these different duties. And by the way, don't worry about taking notes. We're going to give you a lovely parting gift. We're going to send you these slides in a PDF form so you can go back and read all this text, which I apologize is not very sexy, but it is, I think, useful information. So, when you're talking about executive employees, this is what we're talking about. So salary test, above a certain salary and meeting this duties test for the executive employee. The administrative employees, I think, probably the category where people are going to have the most challenges in terms of their exemptions. These are the employees who are right there on the cusp in terms of whether they're doing exempt duties or not. I'll let you read this in more detail later on. But you're basically, I think the key part is this question of exercising discretion, independent judgment with respect to matters of significance. So, does your administrative staff have some kind of discretion to make decisions? And that's going to be the key question as to whether they've satisfied the administrative employee duties test. And then professional employees, this is where you get into requiring somebody to have a certain degree. They obviously are, well, I shouldn't say obviously, but they also would be expected to have some type of discretion in terms of how they exercise their duties, and those types of requirements. You can see this in more detail. But the bottom line is, it's somewhere between administrative and executive, but the point is that they have to be doing something other than just, menial rote work. There are some other duties tests involved here. We get into this question of creative professionals. So, are they doing creative work on their own? Imagination, originality, in order to be classified exempt under that duties test. And then teachers, lawyers, and doctors, well, they're exempt as well. I think the theory here is that these folks probably are on such an irregular schedule that it's very hard to put them on a clock and decide, and force them into being paid overtime. So, this is the basic structure. Let me talk a little bit about what employers should be doing at this point. So, the first salary threshold went into effect on July 1st. I suspect it didn't get a lot of attention. Maybe people don't know that that's happened, but it is happened. It's a live fire exercise right now. And what I would tell employers to do, and let me just express this caveat that I'm not here to give legal advice. You have folks on this call who can do that for you. But as a practical matter, I think employers should be looking at whoever they have currently classified as exempt, look at their salary level, decide, if it's below the new salary threshold, then they have to decide whether they want to increase that salary, increase the salary to that person to keep them exempt, or are they going to reclassify them as non-exempt and eligible for overtime? One of the, I think, great miscalculations by the Department of Labor is they assume people are just going to get reclassified and continue making this money as overtime. And I think the reality is that employers are going to be very careful about the hours that they let people work. Excuse me. And they may be eligible, but they may not actually earn overtime. The other complications that flow from this are, now that we are, I think, very much, at least I know I am, in a hybrid work environment where we work from home. I work from home. I'm sitting at my home right now. Putting somebody on the clock who's actually working remotely or from home is very challenging. You're going to have a hard time tracking their hours and knowing when they've they've exceeded 40 hours a week. And a lot of people really enjoy that flexibility. I can speak from personal experience that I enjoy it very much. It also is a way that some people are able to manage personal home life issues like childcare. You can work from home and be there for your children type of thing. So if you're forced to be on the clock and you no longer have the option of being able to work from home, I think that's going to resonate badly amongst a lot of employees. We also learned back during the Obama rulemaking that a lot of employees who are classified, pardon me, who are classified as exempt, really enjoy that professional status. They think it gives them a higher level of standing, and they enjoy the flexibility because if you're not on the clock, you can take time off to do things as long as you're getting your work done. If you're put on the clock, you don't have that flexibility anymore. And people really didn't like the idea of getting reclassified, despite what the Department of Labor was thinking. So, you know, the upshot of this is that employers are going to have some decisions to make. And I would say much more so around January 1st. You know, the July 1st increase may not have disrupted too many people, but the January 1st increase, I think, is going to. A quick note on what's happening in terms of opposing this regulation. Excuse me. There are legal challenges against this regulation that have been filed in several different district courts in Texas. At this point, we don't have any clear signals of this being blocked from going into effect or going further into effect. But, I mean, those cases are underway, so we'll have to see what happens. One of the cases was filed in the same jurisdiction, in the same court, as the court that invalidated the Obama regulation. And so there's some hope that they'll see it in the same light in terms of being too significant a salary threshold increase and thereby eliminating the value of the duties test, which was seen to be the more critical assessment of whether somebody should be exempt. At best, the salary threshold is supposed to be a proxy. It's supposed to, show that line where the duties test would kick in. At this point, what you're going to have are people who are exempt one day by doing their duties and not exempt the next day because the salary threshold is too high. And so that's the argument. And we hope that, we'll get a favorable hearing, a favorable result, as we did back during the Obama rulemaking. So that's pretty much what I have for you today. And I'm happy to open it up to any conversation or discussion and, hear what's on people's minds and get any questions going. I'd be happy to have a conversation around this.
We do want to encourage you all to place your questions in I see the Q&A session. We already have a question. Mark, can you hear me?
Yeah.
Okay, perfect. This question is, our organization currently has all salaried exempt employees. For those staff that earn 45K, we understand this does not meet the upcoming threshold. Can we have salary non-exempt? Do we have to make them hourly employees? Can we give them 40 hours a week? Do we have to track time if they are only 40 hours per week?
So let me understand this. It sounds like if they're already paying $45,000 a year, I thought that's what I heard. If that's the case, then they're above the salary threshold, then they're good. If it's not, if I heard that incorrectly, then they're not paying that level, then they have to make the decision about whether to reclassify somebody. You can, in fact, pay somebody on a salary basis. But if they're not above the certain salary threshold, then you've got to track their hours. It's a little bit odd to pay a salary and then track the hours, but at the end of the day, the Department of Labor is going to expect you to know whether someone is earning overtime, and then you would just use the, the salary threshold divided by the number of hours to calculate the rate. But I mean, the point is, unless they're being paid above that salary threshold, as a salary, and they meet the duties test, they are going to be non-exempt or eligible for overtime. So that's what it comes down to.
Okay. And are actors exempt from overtime?
Good question. I'm gonna take a guess, and really that's all it is. I think there's something in the statute about that, but I'd have to go look that up to give you a firm answer. So I don't know that for sure, but I'm guessing because of the nature of their work, they may be, but I'd have to look that up.
So that's something that we can definitely follow up with you on to give us some more insight on that.
Right.
Okay. Okay.
Or and here's a plug for the folks on your call who are in the legal profession. When I talked about what employers should be doing, they should be working with qualified outside counsel who can guide them on these questions. I mean, this is one where it pays to work with somebody who understands this issue closely and can, determine whether someone's doing the right duties or something like that. So, you don't want to take chances here. This is the kind of thing where if you get caught, and you would get caught because an employee complains to the Department of Labor, or they decide to come through and just, we're going to go after certain industries, then, as I like to say, there's no such thing as a single plaintiff here. If you're not paying one person, you're probably not paying more than one person, and it adds up quickly, and you're going to be writing a check with several zeros on it. So a little, little prevention here goes a long way.
Perfect. The next question is there a minimum size business to which this applies?
Nope. Easy answer.
Okay.
Nope. Small businesses are just as vulnerable as large businesses. We talk about this a lot of times in the context of small businesses because they probably have a harder time making these adjustments. I mean, if you're going to increase the salary thresholds and you have to, as a small business, increase that labor cost, it's going to have a greater impact on the small business sector than it would on the large employers. But there is no size threshold here.
Okay. Next question is providing comp time ever an acceptable substitute to paying overtime?
It's an interesting question because I was involved in some years ago in an effort to try and get legislation out there that would have allowed employers to provide paid comp time in exchange for overtime. It is not federal law. So from that standpoint, it's not an acceptable substitute. I'm not sure what the laws of Tennessee provide. There may be a few places where that's allowed, but for the most part, I would say that's not allowed under the federal law.
Okay. Do you think the January 1st threshold will be recalculated before implementation, assuming there is not a successful legal challenge stopping?
No, unfortunately, I don't think that's going to happen. I mean, the only thing that's going to get in the way of that is some type of legal ruling that says that that threshold is way too high. The Department of Labor has, made it clear this is what they think they need to do. I don't expect them to, and in order to do that, they'd have to engage in a whole new rulemaking, et cetera. I don't see that happening. Sadly, I guess that's unfortunate, but I don't expect that to happen.
Okay. Does employer paid benefits play into salary calculation?
There's a great question. There is another regulation out there that's called regular rate. And as I said before, an employer has to pay 1.5 times the regular rate of pay if the employee works overtime. What goes into that question of regular rate is defined by this other regulation. There are some benefits that can be considered part of regular rate, but not all benefits. It's a fairly detailed, wonky type of discussion. Excuse me. I'll just say that what goes into regular rate is defined by that regulation.
Perfect. And Meredith Hennessy is going to continue to fill these questions.
Yeah, I'm gonna free up Patricia a little bit. Okay, so I get to ask and read off some of these questions. So next question is, what tips do you have to roll this out as efficiently as possible with the staff it has impacted? Paper timesheets, digital tracking.
The basic tip I would give you is to be transparent. You got to figure out who's covered, who's affected. Start with that. And then to the extent that your decision is to reclassify people or somebody from exempt to non-exempt, and then thereby put them on the clock, you've got to tell them this is because of the law. It isn't because it's a downgrade of their performance, or there's nothing about this that relates to how you see them as an employee. You're just being forced to do this because this is what the new salary threshold is, and this is the new law. As far as the mechanics are concerned, I don't have a good handle on that. That's up to people who, are in the HR profession and can tell you what works best there. But if I was going to advise anybody in terms of how to roll this out, I would say you got to, hide behind the regulation. I mean, if you're going to do this, make it clear to people this is not about, because there are people, it's like, what did I do wrong? How come you're downgrading me? And you have to make clear to them that it's not because of what they did. It's just because this is the new salary threshold.
Yeah. And there's a callback, more of a note in here that I'll just call out. It looks like from folks who were paying extra close attention to your presentation that actors were listed as I think part of, maybe under the creative category, as part of those exempt categories.
Okay, there you go. I sort of thought they might be in there somewhere. I just wasn't clear where.
Okay, and the next question, for professions such as case managers inside of schools, could they take the teacher exemption? Our staff work inside of schools the same hours as teachers.
I'm going to suggest that that's a question to be handled by some type of practitioner. My guess is probably not. My guess is the teacher exemption is specific to teachers, not other people operating in the school. But again, I would defer to people who work in these issues, in a practical sense.
Okay, and then another big qualifier here on this one that says, I know you are not a lawyer, not looking for legal advice, but what are your thoughts on January 1, 2025? Is this 63% bump going to happen? Get your crystal ball out.
Well, first, a little correction. I do have a law degree, but I'm not a practicing attorney. So I'm not sitting here trying to give legal advice. Don't go running around saying Friedman from the chamber told me to do this. But the harsh reality is January 1 is coming. And I don't see, unless we get a favorable ruling from one of the cases challenging this regulation, and there are some reasons to hope for that, that January 1 threshold is going to take effect. And it's going to be a real, I think, eye opener and shocker to a lot of employers, and even beyond the small business sector. A lot of large employers are going to have to grapple with that too. That's a big increase. That's a big number. When you're talking about trying to maintain an exemption status. So I don't have a great answer for you. I mean, right now, I think that's the reality that we're facing. And we have to accept that that's on the horizon, unless something operates to disrupt it.
Yeah. Well, I think good guiding advice. Okay, a little bit more commentary here. Moving folks from salary to hourly has been very demoralizing. To those employees who got moved, it'll be more so come January 1st because we'll basically have to move more people. Of the legal challenges still out there, are they all national in scope, or are some very specific in scope, like the one that affected Texas state employees?
Right. And I completely concur with the comment of that, it's demoralizing. And that's something we heard back in the Obama administration rulemaking, and it's certainly going to be the case, I think, as the January 1st threshold, comes into play. The comment about the Texas case is a little bit odd. The state of Texas sued, and right now they got a decision that applies only to the employees of the state of Texas. The other cases are, based on or have a broad coalition of employer groups challenging the regulation, and we would expect that if the decision is favorable, it will apply nationwide. There's been a few hiccups around that question of standing and whether an association can represent people outside the association in a few other cases. But right now, the assumption is that if we get a favorable ruling, it'll apply across the board and block the regulation from going into effect on a national basis.
So we'll just have to wait and see.
Yeah, unfortunately, I don't have a good, this
Yeah.
is a question of letting the process play out. It's not necessarily a comforting answer, but that's the real answer.
Yeah. Well, and I will say sort of, we have one comment, and I know from a local attorney who's chimed in on this question about actors, the hot topic of the afternoon. And it says actors must be viewed on a case-by-case basis, but may fall under the creative overtime exemption. So
That makes a lot of sense. I mean, again, you have to demonstrate that you're doing the things that qualify under the duties test. Are you performing in a way that is creative, that kind of thing. So I think the case by case basis is really probably the right answer.
And I'm just going to follow up because I see Jason's note further down. The employee's primary duty requires work that is original and creative in a recognized field of artistic endeavor. This includes such fields as music, writing, acting, and the graphic arts. So I think just reinforces what you just stated. And I'm going to jump to this note here. Okay, we have a classification of employees that have a compensation plan consisting of a base salary plus monthly commissions and bonuses that combined would generally exceed the current $43,880 threshold, but the salary would only constitute an average of about 30K of that. Does the type of income go into consideration, or is it just their year-to-date total on the W-2?
That's a great question. And the answer, I believe, I'm trying to recall this right now, is that the employer is allowed to credit up to 10% of commissions towards that salary number. So you'd have to do the math to figure out what that means. But the point is, if you're a mixed salary and commissions, you can only take a certain amount of credit for the commissions. And the Department of Labor wants to see a very steady, concept of salary included here.
Yeah. Okay. This is a great question. How does this affect owners who work as employees?
Well, at that level, I would imagine that owner is functioning in the executive capacity. And so, you'd be treated as an executive, showing that you've done the duties, and then you have to be making that salary threshold. Assuming that owner is getting paid as an employee of the company. If they're getting paid some other way, stock options or whatever, that might not be the case. But I would imagine if the owner is, has themselves on the salary, on the payroll, then they would be treated as executive, and you'd have to meet those requirements.
And on that note, I think around sort of the specific exemptions, I do have a question here around going into them and like revisiting them, because I think it is I think we could all benefit. I'll speak for myself, maybe having you walk us through sort of that, the salary versus duties. But before we toggle over to that, there are a couple other questions I want to just go through that I think are tied to some of the questions already raised. And I think this first one maybe is a little more straightforward to respond to. How many hours is considered overtime for salaried employees?
Well, it's all 40 hours a week. And a salaried employee is going to be owed overtime if they're not making the salary threshold and then they work more than 40 hours a week. The point is you have to track their hours if they're not at the salary threshold. So
Right.
if they're eligible because they're not making the salary threshold, then it's all question of 40 hours a week. It's no different than if they're on an hourly person. It's still the same 40 hours a week.
Yeah, so if they worked 41 hours in a week, they would be making their regular salary plus for that extra hour they worked, time and a half, right? So
Correct.
whatever that hourly rate breaks out to, that would
Correct.
be their time and a half. Yeah.
Exactly. And
So
if
it
they're being
doesn't,
paid a
yeah.
salary, then you would just do the math to figure out, that salary divided by 40 hours a week in terms of the regular rate.
Okay, so a couple more questions just sort of about benefits, sort of in that vein. So the note was that I know somebody asked about benefits, but specifically, can we add employer paid health insurance to the employee's salary to meet the threshold?
Again, I'm going to say that answer lies within the regular rate regulation. And I don't have that in my head as to whether that's something that can be added into the regular rate as terms of what you pay, how you calculate the time and a half. So that's a whole nother question that needs to be ironed out, but the answer lies in that whole regulation around regular rate.
And I think this probably has a similar answer, but if the firm gives an occasional quarterly bonus based on profitability, does that bonus factor into salary?
That's going to flow through regular rate. And I'm going to say that the question of the bonus is a question of predictability. Do they know that they're going to get a bonus? Is it preordained, or is it just something that's specific to performance? The more preordained it is, the more likely it's going to factor into regular rate.
Mm-hmm. Okay. And then this question here, when you have an FTE of 37.5 versus 40 hours, what is the overtime calculated on? So it sounds like this person's already not quite working a 40
Well, if they're not working
week.
over 40 hours, there's no overtime obligation. If they only work 37 and a half a week, they're free and clear of overtime. So you don't need to worry about it unless they crest 40 hours.
Okay, and then one more question here that I think might also be tied to a regular rate response, but can an inside salesperson meet the administrative exemption if they are above the salary threshold and make decisions related to customer pricing, orders, etc.? Okay, so maybe this might be tied more to the exemptions, how or who determines matter of significance in independent judgment.
Yeah, that's a huge quagmire. This question of inside sales and outside sales is a long-standing problem. Like I mentioned before, the Fair Labor Standards Act was passed in 1938. I mean, just imagine how many things are different from then to now. In particular, the question of what constitutes an inside salesperson versus an outside salesperson. Under the statute, an outside salesperson is considered exempt. But that means that they have to be spending a certain percentage of their time actually conducting sales outside of the workplace. The reality is that a lot of that type of role is now done through technology. You don't have to go, schlepping your sample bag across town. You can now get on a Zoom call with somebody and do the same thing you would have done if you were in person. So the inside outside sales thing is really an anachronism, and it doesn't work very well. I think to answer this question, an inside salesperson is not going to be exempt if that's what they're doing. If they, I mean, what this question, proposes is sort of that they're actually functioning more like an outside salesperson, and therefore they should be considered an outside salesperson concept and therefore exempt. As I said, it's a big problem area. I don't think the lines in that area are really very distinct anymore. But you as the employer would be the ones to say, well, this person is actually exercising, discretion and determining pricing and matters of significance, etc. You would have to make the argument that they should be exempt because they're doing those things. If you're called and if the Department of Labor wants to do an audit and challenge you on it, that's how you're going to respond, is that no, this person really is exempt because they're doing the following things. I see another question on this list above that, and I just want to touch on it for a moment. About many of our small companies may not really understand the exemptions and whether I can review those again. So just to sort of go back to the beginning, in order to be exempt from being paid overtime, the employee has to meet 3 different requirements. They have to be paid a salary. The salary has to be above a specific threshold, like we've been talking about, and they have to fall into a specific category of exemption. In this case, we've been focusing on the executive, administrative, and professional exemptions, known as the white collar exemptions. Each one of those has specific duties that are attached to it. And so you have to demonstrate that they're meeting the duties associated with those specific classifications. If you can satisfy all 3 of those, and it has to be all 3, then that employee is considered exempt from being paid overtime, and you don't have to worry about whether they work more than 40 hours a week. I hope that goes back. Pardon me, I have a little bit of a cold here.
No, so I think the key there, I heard you say, is they really have to meet all 3. They have to be salaried, the salary has to be above that minimum threshold, and then they need to also fall into one of those specific exemptions that you've reviewed with us.
Right. I mean, we focus on the EAP exemptions here, but as we've talked about, there are certainly other categories that would fall into play here.
Great.
So Mark, are there any areas that you really want to drive home? I know that we had a lot of questions across the gamut when it comes to the different areas of that our small businesses are facing. So do you want to jump back in and just hammer in on some of those areas that you want to leave with the group?
Well, I guess I would just sort of come back to the beginning, which is July 1st has happened. This salary threshold is now live. It's a new salary threshold. If you aren't familiar with it, you need to be familiar with it. And then January 1st is looming. It would behoove employers to go through their employees and figure out who is on the cusp of this salary threshold, or what their initial thoughts are about what they would do if January 1st comes into play. The only reason it's not going to happen is if there's a favorable court decision that blocks it from happening. I don't expect the Department of Labor to reconsider the salary threshold. So, this is, as I said, a live fire exercise. We're now into the realm of what the regulation says and the changes it's implementing, and employers, need to be aware of it and be planning for how they want to respond.
Yeah. Well, I will, well, first I want to thank you, Mark, for your expertise and your presentation and your time. I know despite being a little under the weather, so we really appreciate you. I want to also thank everyone who joined us today, because these were excellent questions. And
The
I
questions
also,
were very good. I have to say,
yeah.
there's lots of good nuances there.
And just to say, on behalf of the Small Business Council, these are, we'll be continuing to support you all, doing our best to help guide you through navigating this new reality. It does really, it seems like it, it's here and it will be our new paradigm, and supporting all of you and each other as best we can. And, Patricia, unless there are any parting words, I think that we are good to adjourn.
Yes, and Larry Robinson, who is our other amazing co-chair. If Larry, if you have anything to share, you can definitely pop on at this point. Okay, I think he's having some technical issues. But Mark, you're going to be able to provide the PDF. I know that you have your presentation, but you just let me know how you want us to send that out so everybody can really go line upon line to really get some clarity. And then are you available for any additional questions?
Sure. I think I sent to you the PDF version of the slides, so you can circulate
Okay.
those to your members. And if anything comes back from the field through you, I can respond as best I can.
Perfect. And Larry is on. Larry? And if you can unmute.
Yes, everybody, as we always say, we're here to support you. We're here to provide outstanding service and make the Small Business Council any and everything it can be to support you in your small business efforts.
Thank you, Larry. And thank you, Mark, for giving insight about this topic. We do want to remind each and every one of you that we have another webinar coming up on Thursday, and it's called Untangling the Web of Certification. That is the first installment of the series about certification that we will have. So if you have not registered for that, please do go to our website to register for Thursday's webinar and those in the series. They're going to be led by our very own Small Business Council members and think tank members, Dottie Summerfield Justy and Gwendolyn Tucker. Thank you all so much for joining us today, and you will receive the copy of the presentation today.
And Patricia, can I add
Sure.
one maybe additional resource that just came in our Q&A? For those of you who are looking for some additional guidance around timesheets and time tracking, there is a note that the Department of Labor website, www.dol.gov. There's a lot of other // we can share that out in a follow-up email, but that might be a helpful resource if you're just trying to think about how you would institute timesheet tracking. So we'll put that out in our email along with the recorded session, right, Patricia?
Absolutely. Thank you so much
Okay.
for sharing that,
Yeah,
Dottie.
thank you.
You all have a wonderful rest of your day.